Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. There we go. So, what do we got going on today? Well, we think we found out an interesting story to start off with. The stock indices are kind of a little down from yesterday's up. Nothing major going on. It's kind of like sideways. It doesn't really... They knock it down big, I guess, last week. A couple percentage points on some indices. Maybe 3.5%, almost 4% on some indices. But overall, that does not exactly excite me. It doesn't make me think the world's coming to an end. But what I have found out over the last couple of days, and now it's pretty much confirmed, and I got charts on it, is that the yield on corporate bonds and the stocks are at their lowest point now since 2011. So they've actually made the bonds more valuable in a sense, even with them still not returning beyond inflation, of course. But we're starting to see that type of action go on. So that's probably, we were looking at the bonds. We were saying, how are they rallying these things? Is that a flight to safety? Are they scared about the future? Is something going on that we don't see? In other words, that's what the kind of like the first inclination I always see is that when they go to bonds, it's usually flight to safety, and they're buying dollars. And I always shake my head and go, well, isn't the the U.S. part of the problem? But in the end result, it's really not that going on at the moment. It's just that the yields have gotten incredibly low. Hey, Robin, how you doing? So the difference between equities or stocks and bonds are the tightest they've been in a while. So that's why they're buying bonds. It's not that there's like a nervousness to a flight of safety, as much as it's just become an actual return. As I was mumbling about that yesterday, saying, you buy low, sell high. The idea is to buy things that actually make money, even if they only make a little money. It's better than actually buying bonds that don't make money. In other words, there's billions and billions out there, trillions out there that yield zero or minus. So today, we realize now that the yield has gotten to a point where between stocks across the planet and bonds, they're the closest they've been in a while. So that means, buy bonds for bond buyers. Where's those bond vigilantes I was saying? What is scaring them so much to the point where they're going, bonds were going up? And let me just show you. You can see the Swiss is moving down a little bit today. Right there. Same thing. Well, we haven't gotten red yet on Forex, but it'll just be a matter of hours, and we'll start to get that. And you can see the green line. Instead of white, we're using green now on there. You can see it's trying to bounce up a little bit. But let's just take a peek at that on the bond side of it. Let's see, where is that at? There's Forex. Right there. There we go. And there is the 30-year, U.S. 30-year has been, climbing. It's been in a buy since here. Hasn't really gone much, but it did start last week when the yield, and like I said, I found a chart on it today, and I thought, oh, that's part of that reach for the bond market in general. And then when we look at the 10-year, there's the 10-year. The shorter term, same situation. They went into the buy, and they've been pressing up for the last 4 days, not 5. When it comes to the shorter term. And you can see, but both weeklies are still in the minus. Let's go back to the 30-year again so we can show you that. The weeklies are still in the minus. They still have not been able to lift. But you can see on the 3.5 super right there, you can see that the dotted line is moving up towards the zero line. So we're starting to get close. And if we can get the green line to join in, with them pretty much in the same week, boy, that usually is a big sign of strength. And Robin and I will be writing an article, that's for sure. Let's see, where do we go from there? I guess that's about it. Let's jump over to good. I think I'll take a sip of my tea since Robin said fine. Thanks. It looks like a quiet day too. Not many people around. So let's see what's going on Tuesday. Let's go back to the Swiss. And you can see there's Swiss moving down a little bit. And you can see our white line trying to pierce down a little bit. And Now, why did I make that green? I guess I was looking at the weekly and thought I'll make it green. But I guess that one's kind of odd in it. It's supposed. Oh, I see what's going on. So that's black and it should be white. So let's fix that. That should be white. There we go. And that should be green. There we are. That's why I made that green, to make them match up. Yeah. And let me just save this. I'm not sure why the Swiss was black, but that's all right. You can see there, it's trying to come down, hit the top of the manifold. Maybe it'll break down. The weekly's been in that buy since here, so it's been 3 full weeks. This is the 4th week now in the buy. Let's see if it survives. Looks pretty high up, so it's the only thing that is remotely turning it is the 5 on the super. That's the only thing that's really turning. All right, from the Swiss. Well, yesterday was a good chatty day, wasn't it? We talked about all kinds of neat things. We looked at all kinds of neat things. Looked at the Chinese yuan and so forth, and we were looking at the euro against the yen. There were some good trading products there. I'm not sure about China, but in the end result is that China is just China. Just it's kind of like an enigma. Let's go over to the euro. Let's see what the euro is. I guess the euro, if the Swiss is heading down, then I would have to believe that the euro is heading up. So let's take a look at that. No, look at that. Isn't that odd? Now the euro is rolling over even harder. And we're getting further away from the bottom end of the range. And you can see we're in that sell right there. The pressure is on. So this is the second day of the sell itself. And we've been in that long weekly sell. Let's contract this a little bit. Can you see it there? There it is. Where's that mouse at? There it is right there. You can see we've been in that weekly sell now since back in here. And I really thought it was going to start. I thought maybe this was the beginning of a firming up of the euro. But obviously today with the Swiss showing strength against the dollar and the euro not, it's like all of a sudden that pattern is just changing. Let's see if it stays that way the rest of the day. And truly disappointing in many forms. I myself would love to see the euro pick up some of the slack for the dollar, but it doesn't seem to want to happen. All right, from there we will jump to, unless someone wants to see something, very few of us out there to be seeing something, I guess. The cable. And the cable, wow. They've put a hatchet to the poor thing. I mean, look how far away it is from the bottom end of the range. That's the bottom end of the range. And it's doing the same thing the Swiss did. It's leaving the range altogether. After a couple years in that range, I guess it's not the inflation. Well, it is the inflation, as I've been saying. I guess what it really comes down to is that the bond yields, the interest rate return, has become more attractive. That's what it really comes down to. So with the interest rates now at their best compared to equities, because equities have come down, and they perked the bonds up. And it's not, like I said, it's not anything fantastically dramatic, but it is a better bond yield relative to the stock equities. So with that in mind, that's why they're buying the bonds, and it's not a move towards safety as much as it's an asset rotation. And that's something we rarely talk about here, is asset rotation, solely because fundamentals have been pretty much on the sidelines for a long while. And then we talked about that yesterday, how the head analyst for Dukascopy, Janos, has had a video out there about how to trade the fundamentals and how it continuously mutated. It kept on changing in a very bad way. It became less and less accurate. So that's the I guess that's the whole story really in the end, is that the lack of yield has really hurt the fundamentals. And now that something of the fundamentals are actually, I guess you could say it's like a not a sense, it's a taste, or not a taste, it's a fragrance, like when you smell something cooking and it really smells good, the odor of it is really sweet and tasty. And so bond yields are looking, as much as they are incredibly low, they're looking better than when they were zero and minus. And so it's forcing capital into the bond market to increase the buying there and rotating out of the stock market. Now, that's kind of crazy in its own right, but that is what it is, and that's what we're watching at the moment. So not more panic, but just a better return on fixed income. I hope that all makes sense. Does that make sense there, Robin? Does it sound logical? All right. From there, we will jump over to, where are we going to go from there? Cable. We go from the cable to the Turkish Lira. See what they're doing with the Turkish Lira. We'll take a quick look at the dollar Turkish Lira right there. Banging again against the top end of that range. And that's the black dots are the top end of that range. And it's been parked there since the beginning of March. Good. Yeah, that's my new understanding of what's going on is the yields. They call it TINA. It's got something to do with treasuries and return and so forth. Treasuries, interest, and some NA. I forget what NA stands for. Something return of assets or something like that. Neutral to assets or something like that. Treasury interest rates neutral to assets, stock assets. All right, from there, let's fix that and see what's going on over on. Where's J4X? Oh, we left off at Swiss. Just take a quick look at Euro, just real quick, if nothing else. There it is, right there. You can see the red for 3 days. So it's got that same pressure we have on Chicago Quant. And then let's look at cable on there. Same situation, getting smack-a-doodled down outside the range. The range was like right there on it. And you can see that pressure heading down. That one's doing it too. How about that? So that's black also. Let's fix that. So I'll make that white. And some of them are black and white. Interesting. Now they match up to the weekly with the green. All right, let's save that. Now that's dollar Turkish Lira. Let's put Euro Turkish Lira up on the screen right there, which is the one we trust more than any of the others. What I mean by that is dollar Turkish Lira is okay. There's no doubt that that the Bank of Turkey credited the dollar going to 18 for them to stall out. It's almost like they're listening to me. Remember, it was my target too for months, and when it hit 18, they made a move of giving away free puts to anybody who buys the currency. So that was pretty cool. Maybe they hang out here once in a while, and if they do, you're welcome to be here. And I'm so impressed. If you're listening, I am so impressed with the strategy you used. Aragon's son-in-law's strategy of 2018-19. It has stabilized your currency, and I think, and I'll reiterate that, I think very heavily that I'm playing with my tea here too, sipping it. I really think that the governments down in South America and so forth should follow your policy. And you can see how the currency that will not be named has locked itself to the dollar. And that's why we see gold going down, and we see oil going down, and we see the currency that will not be named goes up in value because the Russian government has locked their currency to the dollar, not to gold and silver. Not to gold and oil. So that's a real unique thing there, that concept of giving out free puts makes total sense because you can tax. But one thing you get out of that is that you get equity parked in your country, and that will enhance as time goes on. The more money that comes to your country as an investment, will be invested. Doesn't matter how much, even if it's not a lot, but at least it's being invested instead of just rolled and gotten rid of and then hurting the currency. Now you've got a stable currency, and the more money that can be invested only will increase the economy in a positive way, not a negative way. So if anybody from the Turkish central bank is listening, I am totally enthralled and impressed of the strategy, and you should basically, when you're at the OECD, I think that's at the Organization of Economically Developed Countries, you're a member of it, you should pass that along, that should be a new policy for these countries like in South America that literally have to be tied to the dollar to have a functional currency. They would be better off having their own currency fully 100% and giving puts to those who purchase it, just like you're doing. And that would make money stay in that country and investment would grow and so forth, and that's a positive thing. The Laffer curve, basically. All right, so there you can see is we're in a second day in the sell here in the Turkish Lira. That's a very positive thing for Turkey. That means that the currency is gaining in value. And at the same time, you can see it is flirting with the weekly sell. Again, a very positive thing for Turkey. And it's always nice to see that, because the population will be very happy about having a stable currency, which makes it easier for people to function. All right, from the Turkish Lira, we jump over to the Canadian. Now, the Canadian is getting to its, like, I don't know, was that 2-month high or something like that? Or let's see, now the high would be right there. So it's about a 6-week high. And it keeps on moving up. And the dollar, I guess the dollar keeps on getting strong on some level or another. And that may be just literally because they're buying bonds, but not because they're terrified, but because they're a better return than people kind of rationalize that they have been for a while. George of the webinar. I don't think I'm supposed to call it a webinar. Janos told me stop calling it a webinar. For the webcast. How's that? The webcast? A YouTube cast? Good morning to you either way. I don't know if you heard the beginning of my webinar or the broadcast. How's that? But the yields on bonds have gotten to a 2011 year range compared to equities, stock equities, and that's why we're seeing money kind of march its way into the bond market for the last 5 or 6 days. Tina is dead, as they say. All right, from the Canadian, and you can see here too that weekly buy that jumped out yesterday, or I'm sorry, last Friday. Is still marching up, and let's see what it looks like on J4X. Right there. You see that strength there as the green line moves past the what we call the three-dimensional zero or the dash lines. And 3 days of green on the Hinky ASCII. So, George, would you like to see anything particular? Let's see, what else can we say? Well, we're waiting to see if George wants to see anything particular. And then, was it you, George, that started me on the yen yesterday? No, it was D something. I think it was somebody else. That's right. Wasn't you? That was kind of neat to look at the Chinese yuan. You know, it's I think it's moving along again today too. I think it's a little bit higher. Let's see if we can see it on the J4X just for the fun of it, and then we'll go back to the Canadian right there. Yeah, see, it looks a little bit more firmer. It's still in that 657 area. I mean, that's where we were yesterday, is in the 657 area. So I guess it's almost like unchanged today. Oh, look at that too. The green line is trying to turn down. Let's go take a look at it on Chicago Quant, since that's happening. Where are you? Dollar. There it is. Activate. Yeah, but it's got a lot of curve going on. Let's fix that too. Now this one's really multicolored in its weird way. Let's put that in as a white. Let's put that in as a green. Put that in as a the cyan. There we are. Look at them both taking off together. That's interesting. And then let's do it on this one too. White, green, and was that a 3-5 up top, or that's just a 3? So, okay, that's good. And we'll just save that. Save workspace. There we go. So that was interesting how the blue got going, the green joined in with it, and then someone woke up somebody at the People's Bank of China and said, "Oh, you know what, guys? The dollar is rallying like a mad animal. We got to do it too. So let's make our yuan lose some money." And so the government shifted the price scale to it, and zoom they went. When's the last time we saw an action like that? Oh, I guess right. Is that right there? No, nowhere's near. Just a couple days right there, but not like this follow through. Someone probably there thought, okay, we'll make it look like it's following the markets. You know, it's a currency. Laugh, laugh. And silver. Oh, so did you look at the crude yet? No, but since we're at Canadian, let's go over and look at the crude. And let's put the Canadian back up on J4X, and we'll go over on Chicago Quant and look at that. So there's CAD. No, that's not CAD. Right there is CAD. So there's CAD, and it's moving up. Since it's moving up, we assume oil is kind of down the sideways, one or the other. And let's see what crude looks like. There's crude oil. It's up just a little bit. Yep. And it's flirting with that weekly sell right there. And let's see, instead of looking at gold, normally we look at gold with Canadian, but we can look at silver just as easily. So there's silver. Silver is actually down on the day, which makes sense with the way Canadian is moving. And I wonder if gold is down too. Gold is just up a little bit. But silver, let's go back to silver for you. And you can see silver there, you know, it's in that daily sell since right there, and it's been in that weekly sell since that whole hump. So you weren't short because of the daily buy kept you out of the short, and then put you into the short right there, and it was winner winner chicken dinner. Cool, huh? Boy, you should have seen how we should show you on the cattle. What was it yesterday? Our math missed it big time. Can't be right 100% of the time. That's where we get that 89, 87 percentile, 91 percentile at times. But you can't be right. Look at that. Cattle, April cattle was in a daily buy from here. It ran all the way up to there and fell in just 2 days right back to where it started off at. And not only that, which was a drag, if you did good money management and you bought following our math, you know, you caught this nice move, and you had to stop in there somewhere so that you didn't give up your profits. Because look at it, we're still in the weekly buy, and I can't wait. They open up in 34 minutes. I can't wait to see how they open them up, see if they start to lift them again. But that happened in cattle, and all the cattles too. Because let me find you another cattle. You can see that. Now, cattle went into a sell in the April, the front month that expires on Thursday. But here is August cattle. Well, let's show you June cattle first. There's June cattle. But we didn't go into a sell with June cattle. And still in a weekly buy there. And then, what do we got going on there? August cattle, that's it. We got August cattle in here too. Where's Augie Doggy? Augie Doggy cattle. Same game. And stayed in the buy still. It's still in the buy. It's just back down to where we went to the buy. And that's interesting is it's 2 weeks in a buy. This is the third week. Let's see what spot says. C-spot. Yeah, same thing. This is the third week there. And what's interesting is the back month, the August. But there's a perfect example of Doc's math getting beat up a little bit there. Not too bad, but that's a reminder that nothing can be perfect. and we're pretty close. I mean, we're at 89%, 91%, but I don't mind, since my accuracy of my math is so high. Our math, Robin and I's Chicago Quant, so high that we can show you the bad ones. So that's what's made me go to Dukascopy to begin with. Dukascopy was a purist in the sense of truth. See real charts, real time, live. Not some of these places people put charts up. They're like 6 hours old. They're trying to tell you how good their system is, and they change the parameters every so often, and you can see it that the parameters have been changed, and they're sitting there telling you how good their math is. Whereas we do it live from days, like weeks, and we can get as crazy as right there. There is a 1.6 Tesla increment. So it's like that went into the buy at 751, and here we are at 758, and it went higher than where it went in the buy. Vice versa. Back at 735, which is, what is that? That's an hour and like 13 minutes ago. Went into a sell right there, and it went down in value. That's the whole name of the game. Here you couldn't get into the buy because we had a red and a green, and it stayed in the sell all the way out to right here, really. So it went into the sell there. You had your ziggy-zaggies, in other words, the saber-tooth moves. But in the end result is that's what it's all about, traders, is real analysis. Real analysis, not delayed analysis. Okay. Anyway, back to, where were we at? We were looking at the Canadian, and we were looking at the silver and the oil. Did that take care of you there, George? And we're not afraid to show you when our work, it doesn't go the way exactly. I mean, our rules with it was a winner chicken dinner. But you got to imagine how many people are working with cattle and so forth, and they've got it on the hoof out in the field and and pasture and so forth, and they got a little whacked there. And I'm not sure if they're always hedging themselves with binaries and so forth. They're sometimes they're just kind of, it's a wing and a prayer. And our math will help that wing and a prayer dramatically. How do you like that, Robin? See, I got that in there. I thought that was pretty cool. only us, Robin, would show you a loss and brag about it. How many technicians can do that, huh? Isn't that funny? Funny, haha. I think I need a sip of my tea for that. So, all right, from there, since Canadian, we always look at the metals complex, and since the silver is kind of heading down, we got the gold moving up a little bit. More than likely, the South African rand should be a little sideways in here, so let's check out the dollar rand. And let's widen that out, too, because you can see there it's just a tad up. It's just about perfect. But look at let's fix that one, too. But look at the daily. The daily is let's fix that color. Don't ask me why we've never fixed it before, but I think it was because I was looking at J4X and realized that we had a white line up there correlating with this more, but some of them are the other way around. So I thought, you know what? We need to correlate that better. So on J4X now the line is green, just like it is over here. Just trying to show the analogy or the coordination between J4X and Chicago Quant. All right. From there, the South African rand is pretty much sideways to up, matching pretty well with the gold and the silver action. Let's take a look at, let's see, from there we go, oh, I know what it is. We go to the currency that will not be named. Where is that? There. No, that's not it. The currency that will not be named, right there. I've heard some interesting things. I don't want to really say them, because someone might die from it. But there does seem to be, just as the Israeli government is getting ready to fall, I don't think the Russian government is going to fall, but there's got to be change building in it. Also, at the same time, the currency is locked to the dollar. So, in other words, if it was really locked to silver and gold and oil, obviously, just show you what the action has been. There is the currency that will not be named. It is gaining in value, right? But if it's truly locked to gold and oil, there's silver. Okay? There is gold. It's losing value. The dollar is gaining. And here's oil. It's losing value. And the currency that will not be named is gaining. And what do we see when we go and look at the dollar? It's gaining. So what is the currency that will not be named doing? It's locked to the dollar now. So they can pretend all they want that it's locked to oil or gold or whatever, but if it was, it would not be gaining. That's pretty obvious. All right. From there, we'll jump over to the yen. Where's the yen? Okay. There. Let's check out the yen. And there's the yen. Oh, look at that. Looks like we're going to get into a sell today if it stays here. Nice. Let's fix that too. I'm not sure why that's purple. Sometimes you got to wonder what's going on with some of the colors. Let's put the gold in there like so. And then let's make that the white. And then let's make that the green. And let's do a save. Save workspace. There we are. Okay, done. Okay. And so we couldn't get into the sell here because of the volatility signal. And it bounces back up to a plus, but it's down for the day. And now we're starting to flirt with that daily sell right there. So we're seeing that action. Weekly is still very, very firm from when it took off, from the 115-ish area. So that's not giving up anything, really. But it is getting down to the manifold itself. You can see that. And you can see the blue. This is the 3.5 super right there. So you can see it is trying to pressure itself. Now let's put that up on the screen on J4X right there. You see that doing the same thing. We got that red going on matching up with ours doing the same thing. And the volatility signal told us that we're trying to top out in here. When's the last time we've seen a volatility signal in this thing? Not since back in... Where's it at? We haven't had a volatility signal in that thing in a long, long while. We could try to get that to move over a little bit more. Let's see if we can get that to move over. What's up with this? Oh, I see why it won't do it. There we are. So it's been a while since we've seen a volatility signal in this product. There it is right there. Down at the bottom. Almost at the very bottom. I guess that's really the very, very bottom. But right there we had it. And then a couple days of sloppiness. Went into a buy and went back into the sell and then went back into the buy. It would have been nice if that would have been a volatility signal too. And then it's taken off. Oh, there's one right there too. On that second move. Right before the daily buy. Right there. We had a volatility signal, green and red. Interesting. All right. Let's see. Who is next on this hit parade? Oh, yes. Last but not least, the Mexican peso. Let's check her out. Right there. And we're going to put it up on J4X. Right there. Doing a little curvy thing there, too. It's trying to break back down again. Our daily is not. Let's fix that also. Both of them need to be fixed. So let's do that. That's white. That's green. Green. Oh, I see. That's inversed. Let's fix that even more. That's even worse. The histogram is... That's supposed to be the line. And that's supposed to be the histogram. There we are. And so you can see there it is. It's breaking down now, just like it is on J4X. That's why I'm trying to coordinate these things better. So you can see it. You can see the green lines breaking down here. You see it's breaking down there, but it hasn't pierced the zero yet. It's just breaking through the manifold. In this case here, it's pushed through it, and we don't have any red there. And we don't have any red here either. You just double check it. Oh, we might. Let's see if we can fix this. The input's wrong. Now let's see. Nope, still hasn't done it. Still hasn't changed. So it's still moving up in the green just like J4X is right here. Same action there. All right, now let's fix the bottom one. Quiet day today after yesterday. Boy, I had fun yesterday. We were looking at it all. There we are. So you can see there, the white line. Is that right? Why am I? Do I have it reversed? Just double check. Yeah, I have it reversed. That's the line. That's the histogram. There we go. There we go. So yeah, the green line has not pierced yet. Just playing with the top of the manifold right there. Let's do a save on that. There we are. All right, so, oh, and what's interesting, look at that. The weekly is moving up nicely. Let's just double check that. Make sure I have that right. I do have, yes, I do. I have that right. Excellent. So we're starting to go after the weekly buy now, which is nice. And so it's bounced off the bottom end of the range. Let's fix that like that. Nope, not that one. It's that green right there. Make that there like that. There we are. So we're bouncing off of the bottom end of the range here very cleanly. So last couple of days, like last 1, 2, 3, 4, 5 days now, it's been lifting off. It's been in the buy since there. Actually, it's been in the buy a day back, like right there. And it's really pushing. It is pushing good. So maybe it'll come back up to the 50 percentile there. And that is the dollar Mexican peso. Okay. From there, we'll go over to the metals complex and see what's going on with metals, unless someone wants to see a particular currency pair. And let's go look at gold. You see there, it's just firm and happy. And our little green line is trying to lift back up. Our weekly is still -0. And this is just Tuesday at this point anyway. And then let's take a look at silver again. There's a silver. Now it's plus compared to the before. It was minus. So it's very tight in there. And that's been in the sell since, like I said, up back in here. So that's been all over the place. And then let's go to copper. Copper got smacked pretty interesting yesterday too. All the metals seem to get smacked. I wonder if that's a relationship to the dollar again. So in other words, you know, we see these commodities going down, but we keep on seeing the dollar go up. I don't know, maybe that's we've talked about this before where they use surrogates. And you got to wonder, is that what happened to cattle yesterday and some of the other commodities? In other words, they can't short the currency itself or they'll get in trouble. So what they do, you know, with the Federal Reserve, they'll get in trouble. You know, in other words, you know, you say to yourself, who can threaten the ECB? Well, the Federal Reserve. You know, they come out with all crazy things, and not counting Mr. Biden, his circus act. I mean, it's one thing to have Mnuchin in there, but geez, don't they have a socialist as a? Oh yeah, Yellen. That's right. Yellen's a socialist. Yeah, they have our Secretary Treasurer is basically a socialist. So no wonder they're terrified of them. Socialists don't want to hear anything but what they say. Do what I say, not as I do. But anyway, you can see there are all the commodities on some level or another yesterday got smashed. Just as we saw cattle got smashed. So, let's see soybeans yesterday. Did soybeans get smashed? Let's go over to soybeans on J4X. There they are right there. Yeah, they got smashed too. So the commodities got smashed, and in every form. Not only did they get smashed in, you see, that's yesterday because it's not trading yet today. But let's take a look at May Beanos. Beanos got smashed too, just like it is on J4X. They got knocked down. So, and then you can see what they're doing today. They're bouncing back up here. That's live. They trade today. And then let's take a look at corn. Corn got smashed, but started to lift yesterday at the same time. So it was down, but they didn't take out the low of Friday. Let's see what wheat did. Wheat did the same thing. It made a new low, like compared to there. And now it's lifting back up. So I'd have to imagine that we're going to see cattle try to lift up. There's July, same situation, down. It seems to be systemic. It's everywhere. There's September. September made a new low, even with spot not. Let's see. Let's look at November beans. There's November beans, not May. Made new lows yesterday. Robin, if you're listening, they all got smashed yesterday. It wasn't just cattle, but they must have. Cattle has to. Feeders. Look at the price of feeders. $1.70 something, right? Let me just go to feeders. There is April feeders. Now feeders were down yesterday too. Oh no, that's yesterday there. Yeah, because it's not trading yet. And so they beat up on everything as best as they could. And now feeders weren't at the highs. That's April. Let's see where August feeders are. But it seems to me every commodity got smacked yesterday. So if anybody asks about the cattle, why cattle got hit harder, maybe because cattle is, more expensive. I don't know. It could be that, I guess. There's live cattle April. Yeah, so 144. Where's the all-time high or close to it? Okay, so back in the 140s. So it's almost like a big A and a B and then a slam C going on. Let's find another back month for cattle. There's June. Same thing. And let's see if there's the all-time highs, I guess, right there in this stuff. So I guess they just smacked whatever they could. They sold every commodity out there. And maybe they're too thin, the cattle. In other words, there's not enough buyers out there to begin with. You know what? You traded in the cattle pit, don't they? The hogs and the cattle, don't they kind of step back? Aren't they kind of a little weaselly? You know what I mean? They like to let these things fall, and then they jump back on them, that type of thing. In other words, they'll step out of the way. They don't step up for the bid. Let's jump over there. So there's copper. We didn't look at platinum. Let's see what platinum did yesterday. It seems like every commodity got smacked yesterday. There's July. Yeah, did the same thing there too. And that's kind of trying to get back, I guess. But what did it do? It went down to 11. No, it's making a lower low today. 03. So it's like, what's that, 4? That's 7 cents. $7. I'm sorry, $7 even lower today on the platinum. Did silver? Let's see. Did silver make a new low today? No, it didn't make a new low today. Let's see if gold made a new low today. So it'll just be platinum then. Yeah. So platinum. How about copper? Did copper make a new low today? No. Well, we'll see. I bet they start to lift those things. They're weasels, right? Yes. That's what the S is for, right? They're weasels in the commodity, in the cattle and hog pit. Real weasels compared to regular weasels. They're super weasels. Okay. Super weasels in that pit. All right, so that's there. Let's go over to oil and see how that looked. So yesterday they did the same thing. They made a new low, or they made a sharp low, but today they're not making that low. They're lifting it. And then let's see the back month. And we'll do Brent on J4X. There's October. And then let's put it up on J4X, the Brent. Let's see what the Brent's doing. Brent must have gotten smacked like that too. There's Brent oil. Yeah, look at that. They smacked that hard too yesterday. Seems like that's what they did. All the commodities got whacked. There was no discrimination. Every commodity got whacked. Let's see what Nat Gas did. Nat Gas did the same thing, but it lifted and got into a buy by the end of the day. So, you can see it took out the Friday low right there and climbed into a daily buy. And we're in a weekly buy there too, but that's besides the point. But it looks like everything that in the commodity world got smacked yesterday on one level or another. Our math picked up almost on all of it except for cattle. That was about it. How about Robo? Here's June. There's oil for the automobiles. They smacked that yesterday. And there it is today. It's lifting back up. Interesting. All right. What else do we do on the energy side? I guess that's... Oh, let's check out European natural gas. There is American natural gas. Where's European natural gas? It's here. There it is right there. Oh, yeah, it's at the lower end. It was touching just about 30. And there it is there yesterday. You can see it. They smacked that down. So everything across the planet in commodities were hit hard yesterday. So you can tell your cattle people that there was no discrimination going on. It's just that they happened to smack the... you can give them a brother-in-law story. Don't mean to open up wounds, but I just thought, you might be able to confirm to them how much of the weasels are in that area of trading. It's Weasels Incorporated. Lots of weasels in that area. The cattle and the hogs. All right. Weasel traders. All right. So from the energies and the stocks, not the stocks, the energies and metals and the commodities, they all got smacked. So let's jump over to what we got. We got about 6-7 minutes. Let's jump over to the stock indices. There's the Nasdaq 100. Again, that got smacked yesterday, made a new low. You don't talk to weasels. No, but you can confirm you knew a weasel since you traded in that pit. You can tell them that may be the excuse why the cattle got hit harder than most, is because the traders that still exist over in there have that habit of letting things sink even further than normal than all the other products. Because they are so weaselly that they will abuse the market itself. Not as if the CFTC cares. From there, the S&P 500, same thing. Made in no way, Jose. You won't ridicule those traders, or you don't want to talk about he who should not be named. Well, you traded in that pit. You can tell them about the truth. Give them the truth. You can see there the stock indices made new lows also yesterday. Everything got smacked. Now today I was a little surprised that they started. I thought they would try to take them up more, and they did it. You can see they broke the high of yesterday, but didn't last long. And then see what the Dow Jones Industrial Average looks like. Same thing. Took out the highs of yesterday just by the hair, and that pressure is on. Lots of pressure there. Then let's see. Oh, let's take a look at an index we rarely look at. The what do they call it? The Russell 2000. And let me just go over to J4X and just give you a flavor of those indices. There's the Tech 100. You know, all that red and pressure, and it's starting to curve a little bit right there. And then let's take a look at S&P 500. Now that has not, it's curving, but it's not through the dashed line like the Tech 100. And oh, let me say this about that. The Tech 100 is very interest rate sensitive. No wonder we saw a lot of strength in it yesterday because of the TINA bond situation. You know, where the Treasury interest rate tightened to the equity market. That's why we saw that strength. And then last but not least, let's take a look at the Dow Jones Industrial Average. Right there. Yeah, that low again. And it's not being met today so far. Wow, look at the way the volume dropped on that. Then let's take a look at, let's see what we got. We got the Nasdaq, the Russell 2000 over here on Chicago Quant. Let's just take a look at that real quick. This is like this is the replacement for the Tech 100 as a spec index. In other words, the lowest capital. Now that the Tech 100 on Dukascopy is like literally the top companies in the world. And you can see here it's been a weekly sell. We haven't looked this in a while. It's been in a weekly sell since here, right? Yeah. That's a minus, right? No, that's not a minus. So it went into the weekly sell right here. Let's put that in there. And then it was in a buy from this action here. So we can widen this a little bit more. There we go. So it went into the buy right here. And we launched up. Then it sold down hard there. Put it into a sell right there. And it's been a sell ever since. So that was the winner, winner, chicken dinner thing. And let's see what else. That was interesting. But we were in a sell there all the way to here. So we went into the sell there. I haven't looked at this in a while. So it went into the sell there and didn't get into a buy until right there. Then it went into a sell again, daily sell or something like that. No, it couldn't do that. So it was still in, no, it went into a buy. That's what it was. Okay, so it went into the buy there. And then it stayed in the buy because it's a red and a green. So even with it underneath the zero line, it was still in the buy. And then from there, it stayed in the buy all the way to right there. Let's put that in. And that's how that's played out. That's an interesting index. It's the lowest capitalized companies in the United States. So that pushes the speculative side. You know, it's definitely a very aggressive speculative side. This particular index, stock index, that is. And then we will finish this off by looking at the intraday action again of the S&P 500. Oh, you can see we have the other two up there. There's the Tech 100. I'll show you the Tech 100. So it went into the sell like right there and went down. Oh, no. It went into a sell right there. Or no, right here. It zigzagged around and then went into the buy right there. And went up, then it went back into a sell right there. Not there, but there. And it's been drifting since. I don't usually show more than a day, you know, just literally half a day of it, just because it's so active. Whereas this, you know, we follow it. This is the S&P. This is the best of the best to trade. That's where Robin and I met. Robin was an S&P trader, and so was I in the Chicago Mercantile Exchange. So it went into the buy there and went up. Went into the sell right there. Is it there or there? That one? Maybe it's that one. And it was instant gratification there, and that's cool. Then it goes into the buy right. 2 volatility signals there. It goes into the buy right there. And it's a chug, chug, chug up. And then it goes into the sell right there. And it's going to sell all the way out to there. Lots of volatility. Like 3 in a row. Whoa. Woo. A little sloppiness. Our math does some sloppiness. You got to give up something once in a while, traders. And then the math just makes it all back for you. Buku money. Buku. All right, traders. That was fun. Quiet day, but fun. So this is Doc from North America. We will catch you all tomorrow on Happy to Hump Day. So, whoop, not that. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, catch you on the flip side on Happy to Hump Day. Everybody have a safe and smart day. Ta-ta.